Students, we are learning normal dissolution of partnership firm. Earlier we solved first problem in relation to normal dissolution. Let me see the second problem in relation to the normal dissolution. In this problem we are going to learn about treatment of unrealized asset. Sometime the unrealized asset realized by the firm. Sometime the unrealized asset taken over by the partner. Okay. Likewise, in this problem, we'll learn the assets taken over by the partner. The treatment of assets taken over by the partner. Look at the problem. S and W are partner sharing profits in the ratio of 4:1. They decided to dissolve the partnership firm on 31st March 1993. On which date their balance sheet as follows: liabilities, assets. Liability side capitals are given, bank loan and creditor. Bank loan and creditor are treated as a external liability. Then move to the asset side, plant, furniture, debtor, provision for doubtful debts. Treat provision for doubtful debts as a liability. Trademark, stock, cash, advertisement, suspense account, treat like a profit and loss account appears in the asset side. So advertisement suspense account appeared in the asset, so you should treat that one as a accumulated loss. Okay. The realization showed the following results. Debtor realized at 90% of the book value, trademark realized at 8,000, goodwill sold for 10,000, plant and stock were taken out by S for rupees 1,44,000 and rupees 36,000 respectively. So plant and stock taken out by the Mr. S. Okay. Then unrecorded asset estimated at rupees 6,000 and sold for 2,000. Here the total value of the unrecorded asset estimated at rupees 6,000, but it realization value 2,000. So we should consider the realized value, not the total value. So we will consider the 2,000. Then discount on creditor estimated at rupees 800. So creditor allowed us discount rupees 800. So creditor total value, book value 80,000, on which they allowed discount to the business. How much? 800. So the net amount payable to the creditor 79,200. Then realization expenses came to 4,000. Prepare necessary ledger accounts. Okay. Now first we have to prepare realization account, then capital account, at last bank account. First we will transfer all assets to the realization account. For that entry already I taught realization account data to all assets. Consider the book value. The first asset is plant. Plant book value 1,20,000. To plant, its book value 1,20,000. The next asset is furniture. Its book value 4,000. Next we have debtor. Debtor total value 90,000. Provision for doubtful debts. Provision for doubtful debts treated as a liability. Provision for doubtful debts treated as a liability. Its value 4,000. Then trademark valued book value. Trademark book value 12,000. Trademark book value 12,000. Then stock, its book value, stock book value 60,000. Cash need not to be transferred to the realization account. Advertisement suspense should be transferred to the partner capital account. We transferred all assets to the realization account. Now we will record the entry for realization of assets. Further, the entry is bank account data to realization by bank. Okay, debtor realized at 90%. So the total debtor value 90,000, of which 90% realized. So its value 81,000. So 90,000 into 90%, 81,000. So debtor realized at 81,000. Then trademark realized at 8,000. Trademark realized at 8,000. Then goodwill 10,000. Goodwill 10,000. Plant and stock were taken out by Yes, for rupees 1,44,000 and 36,000, that is the next entry. First we will close this. So the assets are realized. Debtor realized 81,000. Debtor realized 81,000. Then trademark realized at 8,000, goodwill realized at 10,000. So the total assets realization 99,000. The entry is bank account data to realization. Here some assets, namely plant and stock taken out by Mr. S. So the entry is S capital account data to realization. So it will be recorded in the credit side of realization account as by S capital. His taken over value 1,44,000 and 36,000. So 1,44,000 plus 36,000. Total assets taken over by S at rupees 1,80,000. So assets are transferred to the realization account. Then the assets are realized, recorded in the credit side. Then the assets are taken out by Mr. S at realized value. Then we'll take the external liability. External liabilities are bank loan and creditor should be transferred to the realization account. The entry is bank loan creditor account data to realization. So it will be recorded in the credit side by bank loan. By bank loan, its value 20,000. By creditor, its value 80,000. So the total external liability 1 lakh. Now we should make payment to the external liability. The entry is realization account data to bank. The total value of external liability 1 lakh, on which 800 rupees discount allowed on creditor. So the balance amount 1 lakh minus 800. So the total amount payable to external liability is 99,200. So external liabilities are transferred to the realization account and external liabilities are settled. Now we'll move to the other adjustment. An unrecorded asset estimated 6,000 sold for rupees 2,000. If unrecorded asset is realized, the entry is bank account data to realization. The entry is bank account data to realization. It is for unrecorded asset. Unrecorded asset. The value, we should take the net realizable value. If unrecorded asset is realized, the entry is bank account data to realization. So it will be recorded in the credit side of realization account as by bank. Its value 2,000. Sometime the unrecorded asset may be taken out by one of the partner. In that case, the entry is respective partner account data, respective partner account data, respective partner capital account data to realization. Students, if unrecorded asset realized by the firm, the entry is bank account data to realization. If unrecorded asset taken out by the partner, the entry is respective partner capital account data to realization. Here the unrecorded asset taken over by partner. So in this problem we have unrecorded asset. The entry is bank account data to realization. Then realization expenses came to 4,000. The entry is realization account data to bank. Realization account data to bank, value 4,000. Okay students, we recorded all the entries. Now we'll balance the realization account. In this problem, the debit side of realization heavier than credit side. First we'll total the debit side. 1,20,000 plus 4,000 plus 90,000 plus 12,000 plus 60,000 plus 99,200 plus 4,000. So the total debit side 3,89,200. 3,89,200. Deduct all credit side value. Minus 4,000, minus 99,000, minus 1,80,000, minus 20,000, minus 80,000, minus 2,000. So the realization loss is 4,200. This is realization loss. Realization loss balancing figure. It should be transferred to the old partner capital account, namely S capital and W capital. The ratio we know 4:1. So 4 by 5 goes to S, 1 by 5 goes to W. So 4,500 divided by 5 into 4. So for S 3,360, 4,200 divided by 5 into 1, 840 goes to W. So realization loss transferred to S capital and W capital. For that entry, S capital account data, W capital account data to realization. Now we are going to prepare capital account. For that, first we will take the capital account of existing partner. It will be recorded in the credit side of capital account as by balance BD. By balance BD, S is capital 1,60,000. W capital 60,000. Then in this problem, in liability side, general reserve and profit and loss account not given. Then go to the asset side, search profit and loss account. Profit and loss account is not given. Instead of that, advertisement suspense account is given. It should be transferred to the partner capital. So it will be recorded in the debit side. The entry is S capital, W capital account data to advertisement suspense. So it will be recorded in the debit side of capital account as advertisement suspense account. The total value 10,000. It should be divided in the ratio of 4:1. So 8,000 goes to W, 2,000 goes 8,000 goes to S, 2,000 goes to W. Then go to the relation account, take the capital. In debit side, here we do not have any capitals. In credit side, we have S capital. In relation account, credit side we have S capital. So it will be appeared in the debit side of capital account as to realization. It goes to S capital value 1,80,000. Then we have one more capital for realization loss. It recorded in the credit side. So in capital account, it will be recorded in the debit side as to realization. To realization 3,360, 840. Then no other capitals are available. Now let me close capital account of the partner. As far as S concerned, the debit side total heavier than credit side. First we will close the S capital, debit side value heavier. Debit side 8,000 plus 1,80,000 plus 3,660. So the total S capital debit side value 1,91,360. 1,91,360 minus available capital 1,60,000. So 31,360, that is the deficiency of capital we should collect from the S. So this is an amount we should collect from S. The entry is bank account data to S capital. Then move to the W capital. W capital credit side value heavier than debit side. So out of 60,000, suspense account 2,000, then relation loss 840 should be deducted. So balance 57,160 payable to W. So this is an excess amount available for W. It should be paid to the W. Then we have to prepare bank account. First we will take the opening balance of cash and bank. Here cash is given. It should be considered as bank. So opening cash we should record as to balance BD. Its value 28,000. Then go to the realization account, take all banks. Debit side we have bank. It is for payment to the external liabilities. So it will be recorded in the credit side of bank account as realization. Its value 99,200. Then we have bank. It is for realization expenses. It will be recorded in the credit side as realization. Its value 4,000. Then go to the credit side. Here we have bank. It is for realization of fixed asset. It will be recorded in the debit side as to realization. Its value 99,000. Then here we have bank. It is for realization of unrecorded asset. It will be recorded in the debit side as to realization. Its value 2,000. Then move to the capital account, take the bank. Capital account debit side we have bank. It is a payment to W. The entry is W capital account data to bank. Bank recorded in the credit side. So the entry is W capital account data to bank. In journal entry bank credited. So in bank account it will be recorded in the credit side as by W capital. W capital the value 57,160. 57,160. Likewise, The deficiency capital we should collect from the S. The entry is bank account data to S. So bank is debited. So to S capital 31,360. Now we should total the bank account. It should agree. Debit side value 28,000 plus 99,000 plus 2,000 plus 31,360. The total of debit side of bank account 1,60,360. Credit side 99,200 plus 4,000 plus 57,160. So the credit side value 1,60,360. Students, our answer is correct. Once again I am repeating here, unrecorded asset realized by the firm, the entry is bank account data to realization. If unrecorded asset taken out by any one partner, respective partner capital account data to realization. Likewise the unrecorded liability, if unrecorded liability paid by the firm, the entry is realization account data to bank. Likewise, sometime the unrecorded liability taken out by one of the partner, the entry is partner capital account data to realization. Partner capital account data to, realization account data to partner capital. Realization account data to partner capital. Students, we completed the second problem in relation to normal dissolution of firm. In next class, we will solve different problem. Till then, bye and thank you.